So cryptocurrency is getting popular again. As of November 17th, 2023, Bitcoin is up 120% year to date, and Ethereum is up 64% year to date. And because they are the largest coin out there by market cap, their movement upward also lifts up the entire rest of the market of alternative coins as well. So it's starting to get back into the spotlight. And if someone wants to have cryptocurrency exposure in their IRA or in their taxable brokerage account, really the biggest player that provides these investment products is Grayscale. If you are just blindly buying for just any of their product, you may be overpaying by a factor of 7, meaning for something that's worth $1, you're paying $7 for. And that's only a recipe for disaster. So watch through this video to the end to learn which products of theirs to avoid and which products of theirs to consider for further research to see if it's the right fit for yourself. So Grayscale's biggest investment product is the Grayscale Filecoin Trust, GBTC, and then you have the second biggest one, which is the Grayscale Ethereum Trust, ETHE. Now, I do like Grayscale's approach of owning the underlying cryptocurrencies directly, as opposed to other products that use futures and derivatives to simulate the price movement. And oftentimes those products are very expensive and often perform very differently than the price movement of their underlying holding. So the biggest one is ProShare Bitcoin Strategy ETF, which has about $900 million invested in it. And year to date, it rose 75%, which sounds great, but you have to factor in that the underlying holding they're trying to represent grew 120%. But there is a problem with Grayscale's publicly traded investment trust. Because they are not ETFs and they trade over the counter, oftentimes the price movement doesn't reflect the underlying holdings, meaning that the group of investors that are buying and selling as a whole may be way overpricing or way underpricing the product itself. So the price movement of the product can be very different from the price movement of the actual underlying holding. So we'll start off by looking at the two most extreme examples, the Bitcoin Investment Trust and also the Filecoin Trust, which is fairly new. Let's look at the chart here since inception. Let's zoom in to more recent activities. So you'll see two different lines here. The first one is a gray line on the bottom here for market price, and there is a black line for the holdings that it represents. And when the market price is below the holdings per share price, then what you see is the investment trust is trading at a discount. So with the Filecoin Trust, let's look at an opposite example. You'll see here the gray line, market price, is on top of the holdings per share, meaning the product is trading at a premium. So the problem is overpaying for anything is never a good idea. Just look back at the dot-com stocks in the late 1990s, single-family homes and real estate investment trusts as a whole in 2007. When you overpay for something, eventually the stock market as a whole comes to their senses and the price collapses. And the Grayscale Bitcoin did have this issue as well when it first came out. So when you look at the first bull market in the cryptocurrency space and the Bitcoin investment trust grew significantly, there was a lot more demand for this product than the company could absorb. So the stock price rose significantly higher than the underlying holdings. You'll see here, the Bitcoin Investment Trust was trading at $1.32 when the holdings it was representing was trading at $1.22. This is not too big of a gap. But as the market continued to run upward and there was way too much of a demand, you see at the peak, the holdings per share was actually worth only about $19, and the market price, meaning what people are actually buying and selling this product for, is $38. So when investors in the Grayscale Bitcoin Trust overpaid by 2 times the underlying value, what happens is that as the Bitcoin market started to fall, the losses were magnified in the Grayscale product. So you'll see the example here, December 18th, 2017, the market price was $38.05. The holdings per share is $19. So from the peak, as the market dropped, you'll see it collapse to, let's use this example, where it drops to $4.63 when the underlying holding dropped to $3.91. And so if you had owned Bitcoin directly, you would have lost about 80% of your value. And if you own the Grayscale Bitcoin Trust, you would have lost about 88%. So where cryptocurrency will go in a few years Nobody knows. But one thing is for certain is that if you overpay for an investment by a huge factor, then you're going to take on extra risk that you didn't intend to. So now let's look at the full list of Grayscale publicly traded products here. So you'll see here that I've color graded it already. And how I've sorted it is by the largest premium to the largest discount. So the Grayscale Filecoin Trust that we talked about earlier is the most expensive product when you look at it by premium. For every dollar of Filecoin that this investment trust owns, people are paying a price of $7.7. And the Bitcoin investment trust is actually trading at a discount, negative 11%, meaning for every dollar of Bitcoin that this owns, you're only paying 90 cents for it. And what this translates to is that if the premium and discount completely disappears, maybe because the market is trading it more efficiently, then what you'll see is a collapse in price of the overpriced products and an increase in price in the discounted products. For Filecoin, if somebody were to buy this now and the underlying holding is only worth $4.46, they're going to see their investment collapse from $34 down to $4.46. And the Bitcoin investment trust, they would have seen their investment go up, where they paid $28.99 and it goes up to $32.74. So if you want exposure to these alternative coins because you believe in the underlying project, I would avoid buying it through Grayscale and instead go through the more complicated step of setting up an account at a cryptocurrency exchange like Coinbase to buy the underlying holding, so you're not overpaying for the coin. But if you want to stick with investments you can buy in your IRA or taxable account, I would only consider the Grayscale Bitcoin Trust. I would consider the Grayscale Ethereum Trust, and finally, the Grayscale Digital Large Cap Fund. Bitcoin Trust is trading at a negative 11% discount. Ethereum Trust is trading at a negative 14% discount. And the Digital Large Cap Fund, which owns the top 5 cryptocurrency in the entire market, is a potentially more diversified investment that is trading at the biggest discount right now of negative 30%. So there's a lot of buzz and speculation around the first Bitcoin spot ETF coming to market pretty soon, either at the end of this year or at the beginning of next year. And there's an opportunity that Grayscale Bitcoin Trust can be converted into an ETF as well. And at that point, the likelihood is that the discount will completely be wiped out because ETFs are much better at tracking the price movement of the underlying holdings that it represents. The Grayscale Ethereum Investment Trust just started the 240-day process with the SEC to be converted into an ETF. So you also start to see people are trying to buy up this product before it converts into an ETF. So the discount is starting to become smaller and smaller as well. So the Grayscale Digital Large Cap Fund is the third largest fund that Grayscale offers, and it can be a good alternative to consider as well. It's still trading at a negative 30% discount. At this point, it's not that diversified of an option because 95% of the underlying holding are just Bitcoin and Ethereum, and 5% are in 3 other alternative coins. But as the market matures, this will automatically become a more diversified option as well as other coins become more verified projects and grow in market cap. And as the Bitcoin Trust and Ethereum Trust, eventually becomes ETFs, I would expect that the Digital Large Cap Fund to be the third in line to become an ETF as well. And this discount may boost the return that investors may experience. So this fund in particular, I did include in some of my clients' holdings as a very small part of a much bigger and more diversified investment portfolio. And I only made these investment recommendations because I have a very deep understanding of my clients' risk tolerance and time horizon and investment goals. So keep in mind, this video is only for educational purposes only. You need to be doing your own due diligence. Cryptocurrency is still a very volatile and immature market. And if you're buying the products that are still heavily discounted, this discount can persist for a very long time, and you may not see an immediate boost in your investment gains. So make sure to do your own due diligence before investing in any of the products described in this video. So if you want to work with me to see if cryptocurrency is appropriate for you as a part of your overall financial plan, visit coplanninggroup.com to schedule a meeting.